I'm Lawanda Benefield, owner of Lawanda Benefield LLC, and I want to share with you today the reasons why some businesses are audited over others. Audit is a big word that I know a lot of people get concerned about. But before I get started, I just want to say as a disclaimer that this is for educational purposes. You have to find your own financial advisor or tax attorney that can assist you with your research when making decisions on your business. So this is not for you to put into practice, it's for you to think about and then do your own research. Thank you. So today I wanted to talk about why some companies get audit triggers over others. And I know that's a word that no one wants to hear, but I just want to give you a little bit of insight as to how that does happen. So when you are a cash business, that's a big sign by itself because of course before advances in technology, oh, hand to fist cash was just the thing to go. But now there's so many electronic records that there's no reason why you cannot have a good system in keeping track of your sales as well as your expenses. And a lot of companies that don't do that, they're the ones that's getting scrutinized. It's imperative today that you keep good financial records and you keep accurate records. And to prove that, IRS got involved with those third-party apps, the Venmos, the Cash Apps, the PayPals of the world that people were using, thinking they're skirting past not reporting income by doing all these transactions in there. Well, that's why they had thresholds that, oh, if you receive, first it was more than 600, then it was more than $2,500. They're just trying to find how ways that people are not reporting income because the IRS wants all income to be reported when you file your taxes. So those days are gone. You pretty much will get a 1099-K if you receive income from any one of those third-party applications. So make sure. And actually, if you have transactions in those 1099-Ks that are non-business related, on your tax return, your tax provider preparer can actually make concessions on there where they choose that these transactions were not business. So there's personal transactions. You can note those. So that's no worry there. But going back to the topic at hand, cash-based businesses are a huge flag for IRS because they want to make sure that you're doing everything appropriately. When it comes to having a company and you have a whole lot of deductions with little to no income, that's a big sign as well. After about 2 or 3 years, IRS expects you to have a profit of some sort. If not, definitely make sure you are keeping immaculate records of receipts. I would keep big ticket receipts that you have to document, yes, we paid these expenses and this is the reason why. Make sure it's categorized correctly when you're doing your financial statements because you want to make sure you have all your ducks in a row. Because the main thing is if it's starting to not create any income, they're going to look at it as a hobby and not a viable business. This falls into place with a lot of LLCs or sole proprietors where again, people are creating things and they're saying they're having a business, but they really do not have one. And IRS considers that a hobby and they're going to tax you on that because you can't just write things off for the sake of writing it off if you're not really in business for real. So I would be careful about that. Another thing is when you're doing mileage logs. So these are those businesses that are definitely ones that deal with transportation, but you can also have mileage expenses when you're going back and forth to clients, but you have to have a accurate log. Your log needs to say the date, the time. They want to see the odometer, the purpose of the trip, where you went, and then where you went from there. Those legs, each leg individually is what keeps track of that. A great app that I've suggested in the past and I still stand by today is Mile IQ. That's a really good one that is great support to show, hey, this leg is business. No, this leg is medical. Oh, this leg is charitable contributions. It's a great way to categorize each trip of your driving. So that way you don't get in trouble. That log is kept for you. So there it is. Another big issue is when you have no receipts. That's a serious problem because now there's no reason not to get one. You may not get a paper one anymore, but most of the time you can always have an electronic one. Having a bank credit card or statement, that also is very good. Bank statements, of course, but receipts are almost hard not to get nowadays. And then they're kept forever. You can pretty much log into any app where you paid something, or you can get it. They send it to you via email. However, you have the receipt, you need to have a receipt. You can't do that back in the day when you just had cash in hand, you're paying under the table, and oh, I don't have any receipts, or no, I didn't file any payroll records, or I paid these people, or oh, yeah, I paid this person. No, you have to actually be able to document that. If not, they're going to count all of that as income to you. So I just wanted to come here to let you know just a few things that make you stand out as this is not a good thing to do, and you want to keep these things in mind. Granted, if you have a solid financial process in place, you can avoid a lot of these issues because these accounting systems now are so good to the point where you can attach your receipt to each transaction. So it's almost like no reason not to have a receipt and have it right there in the records when you need to, when you have to prove it, if you ever get audited, or if you're looking for something in case you need to find it. So if you like this video, please hit like, subscribe to my channel, Lawanda_your CPA. My website is www.lbllc.net. You can reach me on Facebook as well as on LinkedIn and Instagram with my business name, Lawanda Benefield LLC. And hopefully I'll see you next time in the next video. Have a fantastic day. Bye now.